And let's get a reaction from Fast Money friend Gene Munster of Loop Ventures. He's a managing partner there. Gene, always good to speak with you. What's your take here? You like the quarter?
I do, Melissa, and just taking a step back, I think important context is Tesla is growing deliveries at 5x faster than the overall auto industry. Their profitability on a gross margin per vehicle basis is more than 4x greater than the auto industry, a 5 and a 4x. And I think that those two metrics stand alone. And there's a sense of deja vu in the conversation. Seems like every quarter we hear about Tesla beating numbers, margins going up. And I think it begs a question, what's going to change going forward? And I just kind of want to jump to that when I think about the context of the quarter. And I think that this incredible gap that they have, they're up 71%. GM, I think, was down 44% in terms of deliveries in the December quarter. That gap is going to close at some level. It will not, or it will narrow. I don't think it will close. But the profitability piece, and this is critical because for Tesla to have an outsized market cap relative to deliveries from the other car makers, they need to have outsized profitability. But I think that profitability piece is still underappreciated about what they're building. And I would just put this last piece in here, is that the numbers were good. They were actually better than at first glance. They were probably even better than as you normalize some of the numbers for one-time effects like CEO compensation. The numbers were probably better because you can look at things like FSD and some of the revenue. Despite all of its controversy, they're recognizing very little piece of that. That's something the other car makers don't have that will be accretive to margin long term.
Yeah, Tesla had a line in its release, Gene, that really caught my eye, and that is that it had its highest quarterly operating margin among all volume OEMs, this according to the most recent data available, quote, demonstrating that EVs can be more profitable than combustion engine vehicles. So really sort of underscoring that notion that Tesla's got it while the other OEMs don't so far on that profitability piece. Elon Musk wasn't on the call last quarter. He's going to be on the call this quarter. What do you think he's going to say?
I'm hoping for Cybertruck pre-order numbers. It's been a long time since they've updated that. I think your conversation with Phil around Model 2, the earlier car, I'm keenly focused on that. I don't think we're going to hear much about that, in part because they start talking about a new lower price version coming out. They start selling against themselves. And I don't think that they want to do that. They have said that they will be in all vehicle variant classes over time. So undoubtedly, those are going to come. But to answer your question regarding Elon on the call, I think it's just going to be related. I hope he's going to give some insight around the orders. And if just by the way, my bogey is I think it's could be as much as 1.5 million. Compare that to Ford, the F-150 Lightning. I think they're right around 250 or 300,000.
All right, Gene, keep us posted on that. The stock is positive right now, up by 0.4%, about 16 minutes to that conference call.